Well, Toyota, for its part, is sweetening the deal, trying to lure back customers with its no-interest loans and also discount leases. They may even make free maintenance standard for all U.S. buyers. Our next guest says that could mean a bumpy road for the whole and the entire auto industry. Rebecca Lindland is Director of the Americas for the Auto Group at IHS Global Insight. Rebecca, good to see you.
Thanks, Betty.
In person.
Yes.
Okay, so you say that these incentives bad for the entire industry because why? It drives everybody else to do that?
It just really hits balance sheets at a time when balance sheets are still trying to recover from the incredibly poor 2009 that we've been through. So the industry started to wean itself off of incentives, and now this Toyota push to recover market share and their image has put incentives back on the table.
And who could be most hurt by this, or who's most vulnerable to this?
Well, in some ways, people with compromised balance sheets. You know, with GM
like
and Chrysler just starting to come out of bankruptcy, really gaining momentum. As long as they don't suffer any kind of change in their transactions, and their transaction prices, we should be okay. Fortunately for GM, they have some great product. They're selling the Chevy Equinox $5,000 above the previous price, so they're doing okay with that.
And they'd have to at least match, right?
Well, that's what we're finding is that consumers are saying, look, you know, I can go down to Toyota and get a good deal. You know, what about Honda is doing good deals? Everybody's sort of having to match these pricings.
But are these incentives enough to get over that sort of hump that consumers have right now, which is that Toyota cars are possibly unsafe?
Well, it's interesting. I was talking to a colleague of mine, and she's only 25, and she said, why would I buy a Toyota even with such a great deal? And that's the problem Toyota faces, is that the conquest buyer is saying, you know, even with a good deal, I'm going to go someplace else. That's the huge challenge for Toyota now and in the future.
Okay, and for Toyota then, you know, are these incentives going to be enough then to get those buyers back, or do they have to do some more?
Well, they can't necessarily guarantee that they're going to be getting every buyer back into the showroom. The sales results may be a little misleading too, because last year was so poor that we are going to see Toyota have 35–40% year-over-year increases, but that's mostly just because last year was so bad.
And you know those comments from Lutz, you know, their godlike status. I mean, is that true? I mean, has the game changed for Toyota?
It has.
That's it. Okay.
You know, especially for younger buyers. Baby boomers who have always been so loyal to Toyota, they're staying loyal to the brand. They aren't changing that. But the younger buyers, people under 45 primarily, they're questioning whether they're going to buy a Toyota.
Okay, and I'm looking at the clock, in about an hour and a half, we're going to start getting those auto sales numbers, right, for the month of March. What do you expect? I mean, overall, is the tone going to be positive or not?
We are expecting very positive tones from most manufacturers. We're going to certainly expect some really good numbers from GM, from Ford, from Toyota, Nissan, Honda. We may see Chrysler continue to struggle because they're trying to not play in the incentive game, and they have some product that's a little bit older. So other manufacturers may continue to struggle.
Okay, Rebecca, good to see you.
Thanks, Betty.
Thanks for joining us.